I want to thank everybody for being here this afternoon. It's been a long day, I know. And of the 4 sessions that were available to you during this time slot, I just want to thank you for expressing interest in knowing a bit more about what Mars does and how we contribute to the financial services industry as well as the financial technology ecosystem. And today what I want to bring to you is a little bit of sort of how we see fintech evolving within Canada specifically, and how we as a nation, Canada, can be positioned to be a very strong thought leader within this space. And so I want to talk a little bit about banks and fintech startups because this is the space that we function in very specifically, as well as the investor community with venture capital firms, private equity firms, angel investor networks. And so what I want to do today for you is hopefully give you a bit of an authentic and genuine lens as to what's actually happening. I'm not going to predict what's going to happen in the future, but what I want to do today is give you a bit of a flavor of what we've seen so far in the last 18 months in terms of growth in the financial technology space. So I guess I want to start off first by getting a show of hands of how many people here knows what Mars is and what Mars does. Great, perfect. All right, so I won't spend too much time explaining what Mars does, but Mars has changed significantly in the last 18 months, and we're constantly looking ways for, to leverage our resources that we have as a network, as a research innovation center to provide to our startups who are our clients, as well as our corporate partners in financial services, as well as our venture capital partners who, again, are big proponents of our ecosystem. And I'll sort of start off again by sort of saying, Daniel made a good point this morning about the fact that there are many people in this room who have a vast amount of experience in financial services. I'm not going to claim to be one of them. I've only spent about 3 or 4 years in financial services, but what I am passionate about is technology and the way it impacts the way we interact with one another, as well as our financial institutional systems, and how we can better promote financial literacy and financial inclusion, not only in Canada, of course, but globally. So I'll start off with the first slide, which is a quote from Randy Cass, one of the founders and CEO of Nest Wealth. And this is what he said. He said, 80% of people at Nest Wealth have a vast experience in the financial services industry. You really need to understand the distinction between starting a company in financial services and any other industry when it comes to using technology effectively. And I have this title up here that says a fintech startup versus a startup. And I want to sort of focus on this a little bit because typically when you hear about a startup or an entrepreneur, you think about the typical 18-year-old who lives in his parents' basement or in a garage. That's not the case. The demographics that we've seen in entrepreneurship, in financial technology specifically, has ranged from age 35 to 60. So that shows us that the types of folks that are starting these companies are very experienced and experts in these fields, ex-investment bankers, ex-CEOs of big banks, who have a wealth of knowledge and a vast network that they leverage already today to kickstart what they want to solve in the financial services industry. And to me, this is the most exciting thing because we at the forefront get to see all this technology firsthand. The fact that they have their own networks that they can dive into is great, but Mars as an entity offers 4 really key services. The first thing is we give early and late stage companies, mostly late stage companies, access to venture capital. The death of startups typically ends up in the fact that they run out of capital and we don't have enough money coming into the ecosystem to early stage companies so that they can grow and build their products to the level that would make them successful. The second thing is corporate engagements. We have over 50 partnerships in various sectors, about 15 in financial services at Mars, where we effectively try to help our financial institutional partners figure out what innovation means in financial services. And you've heard a lot today about blockchain, which is a huge topic in terms of how it can apply in Canada and specifically in terms of infrastructure, business lines, products. Those are the types of things we try to bring to the table for our financial institutions, and we connect them to the experts in this space. From a technical standpoint, from a business standpoint, it's important for us to realize that all the challenges that the banks face are different, and all their focus points are not always collective, and they're not always concise and coherent. And so what we try to do is we try to give them an authentic lens of what the actual opportunities are based on the types of products and services that are coming out of our entrepreneurial community. And so the third thing I would say that we really help effectively, aside from venture capital as well as corporate engagements, is the fact that we help our companies, our fintech ventures, scale and grow. So if they raise a seed round of $5 million or a Series A, they're obviously going to look to expand their teams, whether it's technical, whether it's business development, whether it's marketing. We have a vast network of angel investors, venture capital firms, ex-CEOs of other banks that already want to participate in the activity that we have put together in these programs, which really help facilitate a circular and symbiotic relationship with each of the startups that come in through our doors. So that would be number 3. The fourth thing I would say is sometimes our startups don't want to spend a ton of money in building out large marketing campaigns to educate the consumers. And so we sort of act as an extension to their marketing team in a sense. We have levers that we can pull from our media, from our digital channels, from our network, that we can help amplify their message or the milestones that they've created. And so this is really the role that we play in the support of the growth and the milestones that our ventures essentially hit. So those are the 4 key pillars that we effectively predominantly service in our startup community. And this is really the reason why our investors and our financial institution partners come to us. For our venture capital firms, we have about 15 physically at Mars in the heart of downtown Toronto. We have 4 buildings, 1.5 million square feet of real estate that houses tenants. Tenants could be a Facebook, Autodesk, Johnson & Johnson, Moneris, CIBC, who is our founding fintech partner in our corporate innovation district. And all of these parties have come to us and said, look, we actually want to be at the heart and the center of all this activity that you guys have tried to cultivate. And the only way to do it is to step away from the corporate environment, from all the red tape that does not enable them to make decisions and to interact with innovators within the space. And so that's one of the reasons why they've taken a huge investment into coming to Mars. This includes big corporations as well as financial institutions, as well as venture capital partners, accounting firms, law firms. There is a wide array of services already available to our ventures who come through the program and who qualify. Now, typically, when you think about an incubator and accelerator, the first couple of that you think about is obviously Communitech, Highline, the DMZ at Ryerson, and Mars. The one thing that I would say that differentiates us from the rest of the incubators and accelerators is that we actually try to step away from the title of incubator, because we actually don't focus too much on that anymore. But what we do is we focus on the accelerating aspect. For companies that have raised a seed round, and typically these range anywhere from $500,000 to $2 million, or a Series A, which again ranges around from $2 million to $30 million, they need the most focus and support of our resources. And so as we continue to build out our tiered services structure, the best way that we can add value to the community are the folks that are in those stages. So if they need, again, those 4 pillars of access to services, to venture capital, to corporate engagements, talent and recruiting, as well as an extension of our marketing team, essentially. So with that, I want to say that it's not just hype, it's authentic. And the reason why I say this is because of all the players that you see on this screen. And we are trying to help facilitate and grow what exists already. So we're trying to bring the ingredients that we have that can make us successful within this industry. And what that basically means is if there's a startup that needs to raise a seed round, they come to Mars. Why? Because we have partners and we have investors that are very interested in investing into early stage companies as well as late stage companies. The second thing is our financial institutions need some guidance. And I know everybody's sort of been knocking a little bit about the financial institutions and how slow they are, but you'd be surprised about how many people that I've met within the financial services industry that have shown a real interest and passion to drive innovation where there is a hesitation to dive into the unknown. And we have tried to help provide a little bit of motivation as well as accuracy to what the opportunities actually are. So again, I'll sort of go back to Daniel's reference to signal versus noise. And there certainly is a lot of noise within this space. But what we try to do is we try to narrow down the signal. So what are the tangible opportunities that lie within specific categories of financial technology, whether that be blockchain? How does that apply in an open environment or a closed environment? If you're looking at machine learning, cybersecurity, there are a number of areas that our financial institution partners right now are investigating that are relative to their own strategies. And so we try to filter and curate the companies that would be best suited for them to understand and to help educate them a little bit and vice versa. So we're hoping through these types of interactions, there'll be a symbiotic relationship built between all these parties that, again, need each other at the end of the day. It's not an adversarial conversation, and where you have disruption, the reason why you have disruption is because you have a lack of collaboration and understanding of the capabilities of what one party is capable of versus the other. And so my view and Mars's view is that if these two parties come together, they will have a better understanding of whether or not there are partnership opportunities, collaboration efforts to be made. And of course, the other thing that our companies look towards is Canada the only market that they can launch their product in? The answer is obviously no, unequivocally no. You know, we have done a lot of work to try to build partnerships with other international fintech hubs around the globe. And the reason for this is because as they look to build their product, Canada may not be the perfect fit to launch their products. And so as they look at other markets, the important thing for us is that we have built these relationships where they don't necessarily have to do the work to go and penetrate those markets, whether they need to have meetings with investors, with financial institutions, or with other key players and entrepreneurs in those markets. And so what we've done is we've built partnerships already with those hubs in key markets. And some of them are in Singapore, in Hong Kong, New York, London. There are a number of startups that have expressed interest into penetrating the Latin America market. And so we have a partnership with Cubo in Sao Paulo, Brazil. And these are the types of relationships that we look to build when we're looking at international footprint. Because again, what we're trying to do is we're trying to elevate Canadian fintech into the global scene. Because when you take a ranking of how Canada scales in terms of innovation and thought leadership within financial technology, Toronto didn't even appear on that list. But we're slowly becoming more recognized for everything we have to offer within our own backyard by the level of talent and innovation and technology and products that are coming out of our entrepreneurs. And so we actually should pound our chest a little bit more to say Canada has the right ingredients to be a fintech leader within this ecosystem. And you know, we always hear about Silicon Valley and Boston and LA and New York. And look, at the end of the day, you know, for the last 18 months, we've only had that much of a runway. And so if you look at how they have expanded and how they've grown and how their ecosystem is flourishing, it's taken them many years to get to that stage. And so we need to be a little bit patient as well, but optimistic and cautiously optimistic, because again, we have a number of barriers that we have to overcome in terms of regulation, compliance, what the actual focus points and strengths that Canada can leverage within the financial technology space. And Mars is, again, trying to be the center of that, but step away once our companies and our investors and our financial institutions figure that part out. The other thing I want to sort of make a point on is that the reason why we're sort of the key parties of this ecosystem is that we don't take an equity position in any of the companies. We are recognized as a nonprofit charity. And so what we want to do is essentially help our startups grow. And we have no vested interest to promote any particular startup. What we want to do is we want to make sure that the best startup and the best entrepreneur that has the best solution in blockchain, P2P international remittance, biometric authentication, big data analytics, are really the ones that shine and become successful and commercialize and partner with big institutions to, again, elevate Canada's fintech ecosystem. We really want to be recognized as a thought leader within the global space, and we definitely have the ingredients to do that. So the last thing I sort of pick on is our investors. Our investors look to us as a pipeline if they're looking for deal flow. And it's not only Canadian VC firms, but we're looking at international venture capital firms. China UnionPay, one of the largest payment systems in China, and their venture capital division has expressed an extreme amount of interest in investing in Canadian fintech companies specifically. They have come to us and said, look, we're ready to write checks to your companies because we've seen the type of technology that you guys were able to create through the Toronto corridor with Waterloo to Vancouver to Montreal. So there are many things that not many people hear and see. And so what I'm trying to do now today is to give you that flavor and that passion and motivation to see that these types of conversations are happening not only locally but internationally. Which brings us to the first polling question, so I hope you have your mobile phone ready. Which is this: does Canada, from your perspective, don't take into consideration what I've just said, from your existing understanding of the Canadian financial systems and financial technologies industry, do you think Canada has what it takes to compete at a global level? So I think we have 30 seconds to make that vote, and hopefully we've had some technical difficulties with the results, but it'll hopefully show up in the next 30 seconds. This is a question to test how patriotic we actually really are. Great, I love to see that. 66% of you in this room said that we have what it takes to compete, and 100% agree. We have all the right ingredients. We need the right chefs. Although too many chefs, not too good. Too many cooks in the kitchen is not too good. So anyways, we'll go to our next slide. So this is data that we've collected, and again, Mars is going through a lot of evolution in terms of our systems. We've gone through a lot of change, but we're trying now to share with the industry the data that we've gathered in our ventures community. So this is the concentration of startups that we see in Canada as a whole, and as you can see, Ontario is a whopping 80% representation of all the fintech startups in our ecosystem. We're tracking close to about 250-ish fintech startups in Canada as a whole. And of course, in the West Coast, Vancouver, we have 10%. And in Quebec, we have 8%. And of course, in Alberta, we have 2% of the startups represented here in Canada. So this is basically all the data that we have pooled and aggregated of the companies that have applied to the Mars Venture Services program within fintech specifically. And so as you can see, the concentration of companies that exist in Canada's ecosystem is very much so in the heart of Ontario. And this is not a surprise, of course, because we are at the center of the financial services sector. And so naturally, it's important to have feet on the street, to have representation, whether you're on the East Coast or the West Coast of Canada, to come to Mars, to have a bit of an understanding of what we do and the value that we can provide to you as a financial institution, as well as a startup, as well as an investor. And so we have gone through a little bit of an educational phase as well. And so what we're trying to do is continue to have that narrative throughout our community. A number of our companies are here today. Daniel from Coho, Daryl from BitGold, and we continue to see more and more companies. It's very exciting for me to share with you these numbers because it's the first that we've ever done this. This is the first we've ever done this. And the reason why we want to do this is because we want to be genuine and authentic about what we see within this ecosystem. Fintech investments by province for the whole year of 2015. So you've heard that we've, as a whole, gotten about $1 billion. Let's break that down a little bit further. Ontario represents about 263 million of investments for the year of 2015. And in BC, that's about 90 million. And in Quebec, that's about 63 million. And in Manitoba, that's about 42 million. Now that's significant. Again, this is data that's not typically shared, but we want to give you a little bit of a slice of what that looks like in each of the major provinces that the startups function in. Fintech investments by category. Here's another big data point. $272 million has been invested into the financial services category. And the four that I've sort of outlined there are the big ones: big data analytics, digital banking, security and authentication, equity crowdfunding. These are the ones that we categorize in financial services specifically. But we have seen a ton of alternative lenders come out in the last 18 months in Canada. And that's nearly due to nature of the success, depending on your definition of success, of the lending club in the US. And many things have unfolded, unfortunately, or fortunately, again, depending on how you see it, with the lending club. But as you can see from an investment standpoint, it still represents a very modest number, about 50 million in alternative lending in Canada specifically. And blockchain as well. Blockchain companies represent a little bit higher than alternative lending, about 56 million in Canada as a whole. And you have the other two in payments and robo-advisory or wealth management. So these are really the major categories that we have seen bubble up in Canadian fintech specifically over the last year or so. What are the opportunities? So as I mentioned previously, it's important for us to recognize the areas and the categories within financial technology that we in Canada can lead in. And what that basically means is we need to be able to accelerate the process in how we acknowledge opportunities with fintech startups. If we represent the financial institutions, one often thing that I see between the big FIs and the startups is that the FIs sometimes know what they want, but they don't know how to intake. They don't know how to bring them into the organization and help filter and have a formal process to rapidly prototype, pilot, validate business opportunities. Whether this is a product-related initiative, or if this is a separate sandbox environment that they've created so that they can test, validate, iterate. But that's the reason why they come to Mars as well. They have set up these specific teams within Mars in our corporate innovation district, specifically to task them to help rapidly validate those ideas. And these are the categories that we think that Canada can take a leadership position on. Biometrics, of course. User experience, that's whether that's in-store, online, wealth management, robo-advisory. These are, again, related to the amount of investments that we have seen in the last slide. Cybersecurity is definitely a big one for us. I mean, we're very strong in the regulatory and compliance area, and we're looked upon as a leader who weathered the storm and financial crisis in 2008. So we have much strength, and we have a lot of opportunities to be leaders in this space, specifically in the global arena. And the companies that have come to us all work within these areas, and some of them function in multiple categories. And I'll give you an example. There is a lending company that leverages machine learning to validate and to go through their KYC process when they're deploying loans. So they work in alternative lending, but they also leverage machine learning and AI and collect data points from all sources on the internet, ranging from anywhere from 1,000 to 1,000,000 data points that adds to their FICO score to help validate the risk involved in deploying capital to individuals or businesses. This is important for us to understand, because the one thing that we could do is to do what everybody else is doing. We don't want to do that. What we want to do is we want to pick specific areas that we, as a nation of innovation, can really focus on and bring to the table, not only through partnerships and through products, but to really change the way we interact with financial services. I had a really interesting session that was put together the other day by Sue Britton, who is the CEO and founder of a company called Growth Syndicate. She ran a workshop that really tested feedback from the industry about how the Generation X, also known as millennials, and Generation Z looked at financial services. And granted, it was a small sample size of folks in those age segments, but it really validated the change in consumer behavior of these consumers. And so her son, about aged 14, brought a number of his friends in high school, and we held a little bit of a working session and a panel specifically for Gen Z. So never mind Gen X or millennials, Gen Z, the next generation after them. And when we asked them, why do you use financial systems that exist today? Why do you use your financial services today? Why do you go banking at a retail environment every day? They say, we don't. We actually like everything online. And we're okay giving you information about us so long as you give us value. And so the creep factor wasn't really a concern for them. So it's important for us to recognize that the change in behaviors in financial services really is coming fast, much quicker than we expect. And these categories that we have sort of outlined here are the ones that can really help us become leaders in catering towards those types of needs. Okay, so regulation. Everybody likes to talk about regulation, so I'll sort of start off with a little bit of Mike Ketchin's quote here, who is here today as well and speaking. He said, "The regulatory barrier scares people away. It really shouldn't. The regulators are open-minded and looking for partners to help them understand how to react to a world that is changing very quickly. It's a great time to start a business in a well-regulated industry." And I completely agree. We had a mission in Ottawa. So by the way, this is again, sort of the role that we play within the industry is that we are heavily involved in all aspects of government, whether that's municipal, provincial, or federal. We have often engaged with our governments to ensure that we give them an accurate lens of what regulation means and how it impacts the startup community. And so Mike Katchen, who is the CEO of Wealthsimple, gave this quote, said it perfectly. You know, at the end of the day, what they're trying to do is understand what innovation means, what privacy means, what does cybersecurity mean in the context of financial technology and how we interact with it every day. And the important thing here to understand is that these companies, these fintech startups, are not here to try to disrupt. They're trying to solve problems. And in doing so, they just so happen to sometimes fall into gray areas in their business models. And so what we try to do is we try to, again, bridge the objectives and the goals of the CEOs of these companies to policymakers in Ottawa. And we had a really phenomenal session. We actually met with over 60 policymakers in Ottawa a number of months ago. And the biggest question that they had was, how do we know that these companies have the best of intentions? And how do we know that their business models are going to protect the consumers? And the answer was obviously that, and we had our startups there, by the way. The answer was, we're not trying to disintermediate by purpose, on purpose. What we're trying to do is we're trying to solve real problems. We're trying to create financial literacy and provide choices for a sub-segment of customers or a broad segment of customers where their behaviors are changing and shifting. So that's important to note because people often think of disruptors, again, as people who intentionally try to change negatively. And again, this has a little bit of a negative connotation, but the sentiment in our community is that they want to work with everybody in the ecosystem. They want to identify and they want to research and they want to test what collaboration actually means. How far can they take their technologies in terms of international as well as domestic? And so the sentiments have been blurred to a varying degree. You know, that's because of our byproduct of our media, byproducts of hearsay. But at the end of the day, the sentiment that we feel is the most accurate is that the fintech startups, they understand the need to be regulated. They understand that they need to help drive competition. They understand that they need to drive down costs. And this is simply of the fact that this is the changing consumer behavior that they've seen, and they're going to narrow down on that. So this is what I mean about narrowing down and focusing on a specific problem when it comes to financial technology. You know, why does it cost almost $20 to send money from my family in Canada to my other family in the Philippines? International remittance, huge pain point. We're paying these ginormous fees where technology can solve. But the problem is, you know, we have 6 big banks here in Canada who, again, just reported very healthy Q2 profits. And their revenue lines are not being chipped away fast enough. But it's coming, and it's started to happen in various areas. And we've seen this, again, because of some of their reactions.
Awkward laughter.
You know, BMO let go nearly 2,000 folks, and they cited the reason was because of changing consumer behaviors. And this is absolutely true. Where those layoffs were made, we have no idea. But look, at the end of the day, this is the reality. The reality is they recognize that they need to change, and they need to do it in a way that's fast and focused, because this is often our biggest challenge in working with financial institutions is to help guide them towards that focus into where they can specifically win. So CIBC is one of our founding partners, and you'll see this again, time and time again. All the big banks are picking partners with specific incubators and accelerators within the space, as well as academia, to get at the forefront and understand these technologies and how they impact the customer journey. The customer journey is, the end of the day, the bread and butter of how you retain your customers. Brings us to our next poll. So do you think Canada's regulatory and compliance environment will hinder fintech innovation? So you have 4 options. Yes, no, maybe, actually help them succeed. How are we doing, Daryl? Oh, a little bit of a tie there between yes and maybe. I think I can agree with that. More with yes, though. And I'll tell you why. It's because we, as Mars, are trying to accelerate as best as possible to all the key policymakers within various areas of mobile payments, cybersecurity, blockchain, machine learning, artificial intelligence, so that they have a good understanding of the impact to the customer. And that's really important for us. Because, again, we're a third party. Whereas if they speak to an FI or a startup, and again, it's always great to hear from the horse's mouth, don't get me wrong. But at the end of the day, we as a third party can tell them what we have heard authentically from both of those parties. And so the educational aspect is coming, and we still have a lot of work to do, I agree. But at the end of the day, what we're trying to do is we're trying to create a level playing field for both parties. But at the same time, there should be some advantages as a startup in financial technology. There should be some advantages because, again, they don't necessarily have the resources and the scale that the big banks do. And so it's important for us to understand that, yes, there should be a level playing field, but to a certain degree where it doesn't stunt the innovation that can come out of it. Taking into consideration consumer privacy, of course, security, big concern. But we need to make sure that we're not shutting down our capabilities and our opportunity to be leaders and a real fintech hub in the global arena.
I think maybe there's a 5th option. I'm not a regulator, I'm a bank.
Yep.
But if I were a regulator, I'd let the fintechs give the banks a run for their money until it was perceived that they were causing real issues for the public.
Yep.
Or real issues for the banks, right? Once you start thinking about destabilizing that, then I'd say, okay, fintechs, enough's enough.
Completely agree.
Let them push.
Completely agree. So the gentleman basically said, let them do their thing, and until something catastrophic happens, then we'll address it.
I go quite fast. I read this other quote. It was, if it looks like a duck, sounds like a duck, it should be regulated like a duck.
Yes, that was I believe that was the CEO of TD, if I remember correctly. But yeah, look, at the end of the day, you know, they have, again, very healthy profit margins. And the reality is that they don't need to be that profitable. And that's just a sheer nature of how they function as a business. They have to deliver to their shareholders. And what we're trying to do is we're trying to help promote competition and choice. And consumer behaviors have proven that will be the main driver in helping fintech succeed. But also the venture capital community also recognizes, not only in Canada, but in the US, in China, that there is a pool of talent in our academia as well as our startup community that is going to be crucial and vital to, again, making sure that Canada is seen as a fintech leader within that space. I guess we'll go back to the slides, Daryl. Yep.
One comment you say will hinder fintech innovation. I think one of the reasons we're seeing so much fintech innovation now is because we have a stable regulatory and compliance environment that's allowed that foundation
Yeah, that's also true too. Yeah, completely. Those are one of our strengths, and I completely agree. So, financial services firms want to get closer to startups. This is happening on a global phenomenon, not just Canada. They obviously want to understand how they can work with fintech startups. And it's not always easy to identify those opportunities because, again, they have thousands of people in their organization that have their own mandates and objectives to deliver. And at the end of the day, their core products is what delivers the majority of their profits and their growth. And to separate the innovation and really focus on what they can do to win in this space is really the least of their concerns at this moment that we've seen. But that is slowly shifting. They haven't been as active in terms of communicating to the industry what they're doing. I think there's a ton of activity that RBC is investing into the blockchain space. All the big banks are in the R3 consortium, 40 international banks. And again, they're looking at ways to leverage that technology to rebuild their infrastructure. So they're looking at open and closed blockchain networks to figure out what load can they handle in terms of transactions or systems talking to each other and using that technology to really cut costs and overhead. So for them, that is the biggest cost to them, to their bottom line, which is their infrastructure, their legacy infrastructure, and the costs that they incur to maintain that infrastructure. And so there are a number of avenues that they can leverage it, but they're still trying to test in a closed environment what that actually means on a global scale. And so hopefully, in the next while, their participation in that consortium will bring out something fruitful, but we've clearly seen that banks and other industries have already started to launch pilots using blockchain technology, whether that be open or closed environments. I mean, I think the biggest value that the blockchain can offer is obviously through an open and public network, but they're taking baby steps, and so we applaud them for that. And similarly, again, the fintech startups obviously want to talk to the big FIs because they have a lot to offer. They have distribution channels, they have customers, they have channel partners that they can tap into. Which sort of comes to the second point, which is there's two types of fintech companies. There are ones that leverage technology and sell into financial institutions. They classify themselves as fintechs. And this is typically represented by big data companies. So we have a number of big data startups that specifically focus on selling into financial institutions and solving some of their problems and their gaps in their organization. And there are the other category of fintech startups is the one that really looks to solve a bleeding problem in our financial services industry. I'll give you one example. There's a company called Instant Financial. And Steve Barra, who's the CEO and founder of that company, he said this, look, I want to help customers. I want to help people who work for hourly wages have access to their pay on a daily basis. And so he's looking to really solve a problem within Canada of workers who struggle and they depend on payday loaners, like a Money Mart, like a Western Union. And so to me, that reinvigorates my passion for what we're capable of doing. We're not just compassionate, but we have the talent and the innovation to look at solving these problems. And what he does is he actually works with all the establishments that pay their workers hourly and deploys a digital prepaid MasterCard or Visa card to their pay the moment they end their shifts. And this is all done through an API integration to the systems, HR systems and finance systems directly. He does all the heavy lifting for those merchants. And when I hear those are really inspiring to me, those types of stories, as well as the ones that are looking to help reduce the cost of international remittance. For the guys who work super hard here in providing for their families overseas in India and China and the Philippines and Hong Kong, they get dinged for a huge amount of fees. And so when you hear about the capabilities of the blockchain technology and how that could be leveraged to reduce friction and costs, Abra in the US is a good example who leverages blockchain technology for P2P and international remittance. It's an amazing business model that we have seen come out of it. And there are a number of companies within the Mars portfolio that also does similar things. So everybody is all raving about the blockchain. So I won't spend too much time on this. I'm not going to be claiming to be an expert by any means. And I'm sure you'll have a good flavor on this as you enjoy the rest of the conference as well. But I'll make a couple of comments. The big thing that we see in blockchain technology really is around the openness of it. If you akin blockchain to, for example, the internet, the real value that it can create is an open system where everybody has access and where everybody can participate in the exchange of value from one point to another. And so the way the banks are looking at it now is that they need to investigate what that actually means in Canada as well as within their own organization again. But that's not really the focus. The R3 consortium was created to really try to solve an infrastructure problem. So there are a number of aspects. We heard about smart contracts, moving value from one point to another without an intermediary. But at the end of the day, infrastructure is really the main focus of these consortiums, and to see what savings there could be in terms of the blockchain technology. So the progress that we have, these are just a few samples of the partnerships that our fintech startups have garnered successfully in Canada. So we continue to see these partnerships develop. Coho with Visa, Borrow with EQ Bank, Finance It with Concentra, Grow with Connexus, Thinking Capital with CIBC. So this is, again, many more proof points that we are moving forward and progressing in driving partnerships, but we need to do it more and we need to do it faster. So I'm going to speed up now, I guess. I've got the red light. Fintech in Canada in terms of funding and deals. We continue to see growth, 4.74% year over year. From 2015 Q1, I'll sort of point you towards that specifically, to Q1 of 2016. The number of investments, so the actual investment number is not as big, but the number of deals has significantly increased. So that's just by the sheer number of checks that have been written to fintechs, obviously not in the same amounts. And some people seem to think that there's a little bit of a bubble. And I'm not going to say if there is a bubble or not, but what I can say is that there are investments being deployed into our companies, and that's what's needed to help these companies get to the point where they can become successful. These are some of the top investors in Canada specifically. You'll see a number of these here that are very familiar: BDC, CRE, First Capital, OMERS Ventures. And collectively, the most exciting thing that I've noticed as a whole is that if we aggregated the amount of investments in 2016 specifically of all these venture capital firms, the amount that is ready to be deployed into fintech startups is amazing. And this is the number. Collectively, a total of $300 to $400 million is ready to be deployed into our fintech companies. This is a reality. All of the companies that you've seen there, as well as the ones that are on the first slide, including the BDC, IVP, Class Capital, these are companies, these are venture capital firms that have specifically said, we've closed funds specifically to deploy into these companies so that we can compete with the Silicon Valleys, with the New Yorks, with the Londons. And so this is, to me, the most exciting thing that I've seen in fintech, aside from the technology itself that we've seen come out of our ventures. So I guess the last poll question that I have for you, just before I wrap up, is this. Where would you like to see Canadian fintech in the next 5 years? More investments, more partnerships, more innovative and disruptive startups, whatever that means to you, more incumbent bank innovation, or all the above? Can we see the results, Daryl? Excellent. Just as I expected. Okay, well, thank you everybody for your time and for attending the session.